Welcome and thanks for joining us. My guest today is Jeff Bentley, the president and CEO of Northwest Federal Credit Union. Jeff, there is tremendous competition these days for the credit card business. Guessing it always doesn't come down to the lowest interest rate as in other areas. What are some of the other factors to consider?
Yeah, so, and that's what everyone leads with, right? We've got this rate or that rate, and some of them are teaser rates, so they're only good for the first 10 months, 12 months, and so you got to be careful of that. A lot of the low rate cards are quote unquote low rate cards in the banking industry. There's fees on top of that. A lot of the points, so if you're looking for rewards cards, and there's different categories where you get 3% on this or 2% on that, gas or groceries, et cetera. You got to look to see the fine print because a lot of that maxes out, it caps out. So anything over $1,000, then you're back to earning less than 1 or even 1%. So you need to really read the fine print when you're looking for cards. A lot of people like to look at travel cards, and travel cards are notorious for that, the certain categories, and you got to look to see which airlines, because sometimes they're only for certain airlines, and if you kind of mix it up, you're not travel a lot, then that could kind of come back and bite you as well. Northwest, we have a great product in that it is a very, very competitive rate. We don't charge any kind of annual fee on it, and our rewards cards will actually pay you 2 times the points, so 2% cash back. The card is so good that it's basically a break even for us. It's almost like a loss leader. And it's, again, trying to help people. Credit cards, especially the younger generation, when you're first starting out and you're learning about credit, how the credit card companies really make a fortune is they get those young people hooked who don't understand the dangers of having that credit line. They run their credit card up, and now they're barely able to just pay the interest on it, and it's a bill that just goes on and on and on, and they can never get out from under it. So we're really sensitive to not specifically get young people started out that way. We want to structure it and try to help them along the way so that they don't get buried into a credit card. And we have products that will have you refinance that card and get into one of our cards, and then you can get out from under that debt load.
How do you weigh rewards against the interest rate to figure out which is best for you?
Yeah, so the rewards, again, so when you use your credit card, you get a transaction fee. The banks and credit unions do. That's how you kind of pay for it. So if you paid your card off every month, the only income we would see on it would be the transaction fee. And the regulators will limit the transaction fee. So we get as 10 billion in assets or less, so we're 4 billion in assets. So we get the maximum transaction fee. If you're larger than 10 billion, like a B of A or Capital One, your transaction fees are cut in half. And so they can't make the same type of rewards points if it weren't for carrying those balances and earning the interest income on those balances. So the fact that we're able to take that transaction fee and basically pay for it and try to keep people from letting their balances go up is another distinction between a credit union and a bank. Now, if you're a smaller bank, a lot of the community banks don't even have a credit card product. They just don't have the resources and able to do that. But the big banks obviously do. And so you need to understand how they're making their money. And they make it real easy. They'll give you a big line of credit and let you go, and hope that you don't pay them back and you get caught in that debt trap.
Are there situations where an annual fee on a credit card can be worthwhile for a member?
It could. I mean, if you are getting the benefit of the points and it makes sense, it's each to his own. But again, if you look around the industry, a 2% cash back is one of the best points programs in the industry. And if you look and compare that to the other institutions that may have something close to that, they're all charging that annual fee. We don't charge an annual fee. Again, it's not part of our focus, our mission. Our mission is to help people financially find their financial freedom and teach them along the way so they don't get themselves in trouble.
Right. Another pitch that you see a lot of from credit card companies is 0% balance transfer.
Yeah, and that's actually not bad if you can use it wisely. It's kind of your get out of jail free card. We also do that, and that's a good way for you to get out from under that debt that you can never pay back and put it in 0% so that the money then does reduce the principal, and over time, then you can get yourself debt free, hopefully. The other institutions, unfortunately, will try to get you to come over at like a teaser rate, hey, 0%.
Right.
And you haven't learned anything. They don't want you to learn anything. They want you to run their card up, and then they've got you. And so it's an interesting tool in the industry, and the fact that it's very predominant it tells you that it's very successful from a profitability perspective of most banks.
But if you have the discipline to pay it off within the time
That's
limit,
right.
You can use it to your advantage.
It is an excellent advantage. And again, you need that partner like a Northwest that will help you and educate you and structure you to get that paid off in those 18 months or whatever the timeline is.
Are there charges associated with credit cards that you won't find at credit unions where you would find at banks?
Well, certainly the interest rates. So credit unions have a regulatory cap of 18%, so that includes credit cards. So even the worst credit member at a credit union will only be charged 18%, whereas banks, you could be paying 30%, 35%, right. And even if you get their best rate out of the gate, and maybe you're late on one payment, you just forgot and you're 10 days late or whatever, they've got it in their contract, well, now you're going to be cranked up to 30% or whatever the max is. And so that's another way that they can kind of get you without you realizing it.
Compounds your problems.
It does, yeah. And you start paying 30% on even a $5,000 balance, it's going to make it really difficult to ever pay that thing off.
Anything else to know about credit card business?
Again, back to the focus on trust. You want to bank with somebody that you can work with and trust and learn and grow with. Your credit card for younger people are usually your first product into the financial world. And if you can learn early how to control yourself, then you're going to find a partner that when you need an auto loan, they'll work with you the same way. And then you'll need a mortgage loan and they'll work with you the same way. So you want a large enough partner, financial institution like a Northwest that has all those products and services, but more importantly, they focus on helping versus profit. So if you're searching for a financial institution that will solve your financial problems, challenges, stop searching. Go Northwest.
I want to thank today's guest, Jeff Bentley, the President and CEO of Northwest Federal Credit Union. I'm your moderator, Bruce Allen. For more on this discussion, visit WTOP.com and search Northwest Federal Credit Union.